Hello, and welcome to Delphian and DelphianTrading.com. Delphian had a seminar in Dallas, Texas, August 23rd through the 24th of 2019. Joshua Smithberger was the speaker at the seminar, and he is a trading strategist with Delphian. Sean Glover also assisted with the speaking, and he is a trading strategist with Delphian as well. Thanks for watching our videos.
A lot of people, when they first come into the platform, say, I want to test this. I want to back test Microsoft. So you kind of have to change your mindset because this is a computer. You have to tell it exactly when you want to get in and exactly when you want to get out. So you can do it by like a calendar. You can do it by technical signals. You can do like monthly, weeklies. You can do an annual trade, seasonal type trade. Earnings, any of the technical indicators. We have candlesticks now, Bollinger Bands, Keltner channels, all different types of stuff. And you can incorporate our state modeling. So like, okay, it just went into our most bullish state. I want to backtest it.
And that's one of the distinguishing characteristics from CML Viz. They've got a fairly limited set of technical indicators. Give me some slack, maybe 4 or 5. They do well with them, but it's a pretty limited set.
Yeah, we have a bunch. So we don't have them all. I'm still trying to get them to add a few like CCI, but we have, I'd say, the big, like MACD, stochastics, a lot of the stuff that people use. So, and you can, the power with this is, you can take multiple signals. So you can have 4 different criteria. You can use stochastics, Keltner, MACD. You can have a bunch of different, 4, 5, 6 different criteria for your entry to like whittle it down. And then you can backtest single stocks. You can do groups of stocks, and you can customize the time period too. So you can go all the way back to 07 and test from 07 to current, yesterday, or you can do the last 6 months, or you can do like a 2-year period back here, whatever you want. It's highly customizable.
So just let me see if I understand. You're saying you can't do Microsoft specifically, but let's say Microsoft is in state 3, and so you can do a set of indicators and say, okay, if a stock is in state 3, these indicators occur, what's the likelihood of this strategy working? Is that correct?
Yes. Yeah, and you can do it for Microsoft, or you just can't say I want to backtest Microsoft. You have to have there's input that you have to give.
And you don't have to specifically state Microsoft in state 3. You can only backtest Microsoft only if it meets a certain Keltner channel indicator.
Right.
It doesn't have to correlate with state modeling at all. I don't know if that's what you were saying.
Well, I thought it did have to correlate with state modeling. That's why I'm
It does not.
learned about your software.
Right. No, it does not. You can backtest it with just any indicator that we have available on the platform.
Okay.
However, what we do a lot with is we take not only Keltner channel, and then we match it up with state modeling together.
Okay.
So when they both give us a bullish or a bearish signal, then we just basically have those 2 indicators that are saying, hey, it's bullish or bearish now.
Now, one other thing, just real quick, it may be coming up in the agenda, but I didn't read the book page for page, word for word, but I flipped through it, and I've been getting your trading ideas. I noticed that the studies in the book are all bullish signals, right? That's because of the period that your data is. Obviously, we're in a 10-year period. Yield curve has the longest expansion ever. The yield curve is inverted a couple of times over the last few weeks. Is there any thought? Are you guys looking at any bearish trading ideas? Bear call, things like that. Because on the ideas, all I see is long call, bull put spread, bull call spread. I don't see.
Yeah, they're all bullish right now.
Right.
So finding a systematic bear strategy is very difficult. I've been on for 2 years to find something. So, we have criteria for the studies where it has to have like win rates over 75% and profitable too. So the bear strategies, systematic. So from 07 you know, we have the full market cycle in there. Obviously, it's been really bullish since '09, but, you know, you still have the big dip. But, you know, I've tested hundreds of strategies looking for a bearish, so, no luck.
But Sean made the point when I asked him the same question, that you could do it, but the window of opportunity was an hour and a half. I mean, just to be flip to make a point, it was hard to come up with anything that fit within a 60 to 100-day window, 120-day window, for example. And I want to make sure that we know that the data goes back to 1/1/2007, correct? So when you're publishing Delphian studies, and it shows a 100% win rate, for example, that includes the period from 1/1/2007.
Mm-hmm. Yeah, we tested like all the studies start from '07, go up to like 18, I think, and 18 maybe. I don't know. So, you know, like over 10 years. But all the data, so we tested that entire period. So we wanted systematic strategies that have worked over time through market cycles. And that's the problem with the bearish. You know,
yeah, I mean, we have not really been in a long-term bear trend since 2009. And we've been in some dips for the last month maybe or something like that, but nothing. That's my concern. You know, everybody's got their opinion. I just feel a longer time trend is coming, but you know, I could be wrong. I could just keep going up.
Yeah.
And like
Go ahead.
No, I was just saying, like Josh said, I mean, we do try to find some as part of the testing, because you see the sentiment in the market, you see what's happening. So the goal is, all right, let's see if we can try to make some money if the market does shift, right? And that's the goal. But like you said, it's just not as easy. You know, you find some, and it's like the win rate's 15%. You're like, all right, well, let me switch this, and now your win rate's like 70%.
Put that out on the email, 50%.
Yeah. So now then you're like, all right, well, let me try to switch these parameters, but you know, we're trying to find some. So if we do, that's what we're doing. But now a lot too, like Ashok gave a seminar yesterday regarding hedging. So hedging some different, you know, stocks using certain indices and buying puts on those indices to use it as a hedge, which is a really great tool, and that might be something to explore putting out there as well, because when you do see this downturn or this possible downturn, you might not be able to make those huge returns like you were when the market was bullish, but at least if you can preserve a lot of that capital and not lose as much, then that might be of a huge benefit as well, you know. So.
Yeah.
Well, the other thing, I mean, the puts are overpriced, so it makes it a challenge. You know, the market's biased inherently up.
True.
So, you know, and, you know, the way, if you watch the markets, I mean, take, you know, little baby steps up and the elevator down, you know, so you got to time it. So that's why it's difficult. I mean, I found around 70% win rate ones, but I just, you know, that's like the max I could find. So I'm still searching.
Yeah,
and there's more studies I have to publish, but you know, for bullish side, but with the seminar time, there's probably 3 or 4 more that'll come out. But
what kind of time window are you trading in?
Hmm?
What kind of time window are you trading for?
Well, the bullish ones, we, you know, we try and get the wins. I mean, within a couple weeks. You know, we buy the options further out, so we don't get much time decay. You know, like 2-3 months out. But we're looking for the signals to occur within, you know, hopefully a few days. You know, the good ones happen within a day or two, and you know, some of them, you know, you're going to lose. But I mean, the average is probably like 12 days, trading days, or something like that. So like 2 weeks.
Most of them are pretty quick.
Yeah. But I mean, like this, you guys keep asking about studies. I mean, like the idea with that is, you know, you're not placing huge bets. You're spreading your risk. So like, you know, we built it originally off the long calls, so it's like 300, you know, out of the money, 300, 500. So you're on like 10 trades. You know, you're going to win like 7 or 8 of them, make money, and you're going to lose a couple of them. So that's the, you know, like the idea behind it originally. So, but you know, we have some other things to try and improve the accuracy of the predictions by looking at market direction, which is what we do first every day. So I teach class every Thursday for 3 hours. It's
Your standard profile in studies is a 60 to 120 day window, a 25% profit target,
right,
and 100% loss.
right.
Which obviously we can go in and modify to our heart's
Right, yeah, you can change it, you can, that's the whole, we'll get into that down the road, but yeah, you can modify it. It's like, oh, I don't want to trade this. Yeah, we do it for, like the bull calls we structure, so, if it, as long as it doesn't tank, you're gonna win, and then we're doing like out of the money, pretty deep out of the money, like bull put spreads, so like, unless it, we're trying to do it for the safest play. So you can go in and change, like, okay, I saw this JP Morgan the other day, I don't want to trade that, bull call strategy, I'm going to modify it. You can go in quickly, say, here's the characteristics I want to use, what were the results? Okay, now it's only 160%, so you can do that, and we'll get into that.
Now, you said, you used the phrase, when we come out with a study. So, and I have not had time to review your website, so maybe it's out there. But, like, we have this write-up of the studies in the book. When you say, when we come out with a study, how is that published? How does a subscriber get that?
We automatically publish them in our screener, so it's populated each day. We automatically scan.
No, I meant the write-up, the background of the study. Like, we did this study and we found this consistently worked with that. Because it's kind of nice in the book to read about.
Yeah.
Is that published or not?
Well, we haven't done any new ones yet. I mean, we have more to put out, but we probably add them on the webpage.
Yeah, it would be nice to send an email, hey, we've got this new study, and to read just the background. Right?
Yeah. I mean, everything with the studies, we tell you exactly, here's the strategy, here's exactly, like, everything down to the detail, like, that we tested. There's no secret sauce that we're hiding. So we tell you the theory. It's like, well, this is how it matches up with state modeling. So, we'll do the same thing for the new ones that come out. So.
And then to your point real quick about just being bearish, Josh is going to show in a couple of minutes just state modeling itself. And we use some state modeling. We use state modeling as an indicator sometimes of a possible peak in the market or different symbols, typically the market, like the S&P or the Russell. And so you can use state modeling to give you a good indicator that, hey, this market might be topping out a little bit, might be selling off. So I have seen some of those indicators come to fruition and then look at different other stocks within the market and maybe test to buy some puts or kind of protect myself or see if I can capture some of that downside. So that would be something possibly coming up if you see these indicators come back within the state modeling that you can prepare for a potential sell-off in the market,
Yeah.
It's not going to tell you how long, 6 months, a year, 2 years, or whatever, but it does kind of give you that idea of, all right, let me start looking at some of this other side for the market.
So by the way, just the only thing I've gotten to work in a down, because in this last 10 years there hasn't been a lengthy downtrend, is buying inverse ETF. Just long inverse ETF, put a trailing stop on it like you have with any kind of stock, and just wait till it stops out,
Right.
and the downturn reverses. I haven't gotten bear call spreads to work consistently or stuff like that.
Yeah, typically if I see that, like the Russell or something shifting, then yeah, I'm typically not going to do like a bull put spread or something like that. I might just buy some straight puts. And like Josh said, the puts are typically going to be a little bit overpriced, but if the indicator says it's bearish, then I don't mind paying that little bit extra money. But like you said, options are a little bit harder to run a tight stop on it, but I'll kind of use that visual stop of like, all right, if I see something shifting, I'll just get out. But if it's going down, it's going to make some money.
Even with long puts, because they're expensive, at least maybe it's the way I picked them or whatever, is like it'll go down, then it'll go sideways a little while, and then I have a stop even on puts, and then, the time decay hits my stop, and, then it'll, so.
It's hard. It's harder.
It's very hard on the downside, I agree with you, but the one thing I found works is just long inverse.
Right. And you can still use that. You can still match that up with like the indicators and state modeling and just do it on the actual shares. You don't have to use the options. I agree. If it goes sideways too much and running a stop on the option is super difficult.